Good morning and happy Monday to you all. It is 7:47 a.m. Chicago time. We've switched our clock yesterday and we are on standard time here in the US. I cannot wait till they get rid of this daylight saving time nonsense. But we've switched, so now it's 7:47 a.m., 8:47 a.m. Eastern. We're doing a show today early because I have some contractors coming to my house to do some remodels, and I needed to be done with this um, ahead of time. So just more and more stuff kind of gets in the way of consistency here. This is episode number 2352. Again, happy Monday. It is the 7th of November, 2022. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, our conversion trading pre-market summary sheet shows that the market's overall sentiment or posture is risk on, risk on. We had a lot of news flow a lot of news flow over the weekend, and this has caused us to kind of shift a little bit across the board. We had Apple warning that COVID-19 restrictions in China are constraining production on its 14 and 14 Pro iPhones, and it's not likely to hit its guidance. So that's pretty negative news. China came out on Saturday, huge press conference to clarify and make sure everybody understands that their COVID policy shall remain the same and that they are not softening up. The expectation is that they would soften up their COVID restrictions in March. And so the market responded to that a little bit by selling off on the open, gapping down a little bit. For example, in crude, the U.S. midterm elections tomorrow, Tuesday, looking for most likely the House shifting to Republicans, and the Senate is a toss-up, potentially shifting to Republicans. It's hard to say. So it's going to be pretty tight. Not sure how much of an impact that'll have on the market, but it just means that the Biden administration, if it loses the Biden administration will be in a kind of a lockup for the rest of the term here. Strong German industrial production this morning. And Russia and Ukraine, it's rumored that they are in potential talks to just freeze or pause the war. Meta came out on the Wall Street Journal. An article in the Wall Street Journal came out saying Meta is cutting jobs, as was indicated in their conference call, that they're very, very careful with job cuts. Today, we don't really have anything during RTH. You could see that the Fed speakers are out pushing since the FOMC. We get the Westpac Consumer Confidence out of Australia and the NAB Business Confidence out of Australia as well. Looking at increased by 5 points or something, but overall the rotations have dropped just a teensy-wincy bit from the prior week. Looking at the S&P, we have a multi-distribution profile, specifically a double distribution profile with an early line in the sand in the S&P right around the prior close and settlement at 3782. The S&P is traded 285,000 contracts at this point, which is pretty decent. Heavy, a little on the heavy side for what is normal. Inventory is 9% long, so no big nothing crushing there. And then for some reason, this thing says that the range is 9.3, which is definitely not correct. The range looks like the range is 3738. So something's up with this formula in here. 3738 to 3805. So the range is really 3738, is about 67 points. I think I might have just, hang on one second. I might have just accidentally touched it. So here we go. Corrected. So the range is pretty decent. It's like, it's the Monday after non-farm payrolls, after the FOMC. It's pretty much a toss-up today. Hard to say what we're looking at in terms of volatility and so on. The point of control at 37.90 in the overnight session is slightly higher than the last two sessions, lower than the sessions before the FOMC. So we are overall in the S&P, we're looking at balance. Remember, we pushed all the way up to 39.20 something recently, and so this is kind of sitting in the middle. Let's take a look at the overall picture. Switch to ES, switch to TPOs. So Friday was really flowing downwards. Friday did a pretty methodical test. Friday opened higher in a gap against Thursday on the non-farm payroll release. Friday was then immediately responsive, moved right back, which was what was expected. It was immediately responsive back to the prior range. Here's a look at it. There's Friday, right? So we had this big movement. Switch colors. We had this big movement on the non-farm payrolls, huge gap, and then we closed it, went right back to the SOC, and then we bounced around the SOC where the auction was. So we kind of discounted the non-farm payrolls, and then right before the open, we just steamed up and then opened right up here, and then it became really immediately responsive right into the SOC again right here. I expected this to hold a little bit better. We had a bit of a chop in the 37.52 area, but really it did not hold up very well. And then once it pushed through, now we have a break of RTH VWAP, RTH mid. Then we're using RTH VWAP and mid as a base for a rally to 38.05 on Friday. So we broke the IB high, and then as soon as we got to 38.05, it was clear that we could not hold these prices. This looked very much like a blow off top. It basically ran stops above 3,800, came right back, and then immediately broke the IB low, sloshed around at the bottom, and then at about 1:15 or 2:15 Eastern, Fed Evans made a comment that he believes that it's appropriate now for the Fed to continue to increase rates, but reduce them to 25 basis points or so. And the market just immediately took off. You can see there's a big lift there, and it just immediately started to take off into the close, settling at 37.7950. So what we have from Friday is a multi-distribution, very actively contested and price discovery profile. We rejected 38.05. Rejected 38.05, and then we also rejected the low end after the non-farm payrolls. We rejected these prices as well. The low to me on Friday seemed kind of weak. It poked through before it started to push higher, but this looks very balancy to me. And then since then, this morning we came in with a gap. We tested down into Friday morning's low, which was the IB low, and then we have basically up and tapped the full session mid up to this point. Right now we have a line in the sand right here at 37.82, 37.80. So this this area here is very important on the open. If we just slosh through it, kind of push through on the open, test below, come down into the high volume node here in the lower distribution, and then move back up to the high volume node in the higher distribution. If we do that, expect balance. Expect this to be a choppy day and sideways, probably filling in around settlement. Really, right now, you know, the overall overall the S&P is pretty much unchanged. It's off by 4.5 points from settlement, or 0.33%. I'm expecting today to be a pretty choppy open. Looking at, again, the TPOs, the TPO chart, you could see that we pushed, you know, we opened into the FOMC, and we almost closed all of the single prints from the FOMC. And if you recall, I talked about the potential for pushing into the FOMC range, and when we do, we want to see how it treats these singles. If it closes the singles, it is likely to balance right here, and then use this as a base to return right back to the high volume node from that day. So back to 38.42, 43, and 38.50. That's basically our most recent kind of acceptance area. So to me, this is a very likely scenario this week. You know, and looking at the overall calendar for the week, let's bring this back. Looking at the overall calendar of the week, they're really, it's slim pickings until Thursday, and Thursday is going to be extremely significant because Thursday we have the inflation, U.S. inflation rate report. So to me, this is very, very likely to drift up. Okay, so I'm not expecting this to push lower. You could see that Friday had a really important opportunity to push lower. We had that non-farm payroll release, which gapped down, and then we got into the rejected range, or the excess low, from Thursday, and we ended up finishing inside of FOMC range, right? This orange triangle is where we closed, and we closed inside of the FOMC range. To me, this is really grabbing onto and accepting the FOMC, and I'm expecting it to close this gap here. So to close the profile up there. So now we overlapped Friday overlapped Thursday, so we're going to shift these together and see where we are. And so now we have this base at 37, 38.39. And if you look at today's low, you'll see that the low is 37.38. 37.38. So when you combine these 2 days into a composite, Thursday and Friday, you'll find that the point of control of those two is 37.39. The low today is 37.38. It's also the IB low of Friday. Okay, so this to me is support, finishing up here, and then it's trading right up here. We're very likely to get back to this 44 to 50 range above. Really, a lot is pointing in this direction. So we do have a fair amount of volume here to get through, and a 38.05, which was rejected on Friday. If we clear the low volume node, and this is very important, if we clear this low volume node, the 38.22 right here, which comes to us from the 3-day balance in October, remember these 3 days, the upper balance, if we clear the 22, then you almost have like an option play or an event contract long for 38, 44, 45, 38.50. This is how things are shaping up. The market has come down. It has tested down into this balance, has rejected this balance, and is back into the upper balance. This is what you need to take away from today's session. Okay, so what's expected for today? Today, I don't have high hopes for the session being very clean in terms of a trade. I expect it to be relatively choppy. I see an open auction. The inventory is pretty much break even. I see this thing chopping. If we're opening in range, there's really no value on Friday. I'm expecting it to test the open again. We're likely to get a gap to settle trade, test the settlement 37.78, 79, push into the lower distribution, point of control right here, or the high volume node right here at 72. Let's put that down, 72, and then I expect it to come right back and squeeze. So we have a weakish high here, expect it to squeeze back into the 38.05 and hold steady. This sets us up for Tuesday, running up into the 38.20. If it doesn't do it today, remember the 38.20 is key right up here, and this is our main target up above. If it doesn't do it today, it's likely to do it tomorrow. Secondary is a rejection of this, so an open auction that finally breaks through 38.05 might get into the 38.10, 15, 10. Expecting a lot of action up there, come back, fall into range, and then just come back to settlement, not accomplish anything but to have tested above. It doesn't mean anything. We'll have a higher high, higher low. We'll have a move higher in the point of control, and this just sets up Tuesday for a push higher as well. So as you can gather, I'm pretty bullish, but I trade price action, not my skew or my expectation of what's going to happen in the next session or whatever, because I'm a day trader. So, but this is how it's shaping up. I hope you gained something today. I hope you gain something every day that you're listening. Good luck today. Mind your risk, and I'll catch you tomorrow morning. Take care.